Hi everyone, Donnie Schultz, Embrace Home Loans here with a market update. It is Thursday, June 23rd, a little bit before 9 a.m., coming off of one of the most volatile weeks in mortgage rates that we've had in decades. So just a quick little recap. Last market update we sent out was Monday, June 13th. We were seeing rates spike up. We were seeing 10-year Treasury sell off, a lot of panic selling in the market coming off of hotter than expected inflation report from the previous Friday. That selling pressure continued into Tuesday. On the market update, we talked about how markets were not going to have a chance to pull back lower until we got past the Federal Reserve meeting last Wednesday. We were hoping that the Federal Reserve was going to come out, be aggressive, and show that they have a lot of backbone to fight inflation, because that's what's driving everything since the beginning of January here, but also calm markets down. And that's exactly what we saw. The Federal Reserve came out. They were more aggressive than expected. Markets were anticipating that they were going to increase the federal funds rate by 50 basis points. They increased by 75 basis points. Again, very tough stance on inflation. Markets appreciated that, but the Federal Reserve also said that they do believe that inflation is a problem that they believe they're going to be able to attack and they're going to be able to correct. It's going to take some time, but we are seeing economic data outside of that inflation data from 2 Fridays ago that shows the economy slowing down. Manufacturing's down, consumer spending's down, rates are up. Housing market slowing down a little bit, although we'll talk in a little bit about my thoughts as far as values and prices. But we are seeing things slow down. That is now being reflected in the longer term yields, the 10-year Treasury, 30-year fixed rate mortgages. We are pulling back pretty significantly from the highs that we saw last Tuesday. 10-year Treasury went as high as 3.5%. 30-year fixed rates were above 6%. Today, we should be opening up in the mid-5s, maybe a little bit lower. 5.375, 5.5% is what I would anticipate to see on most lenders' rate sheets based on the pullback. So it's a pretty significant pullback. We're not too far off from the levels that we saw before the inflation data. And again, it's because the Federal Reserve came out and they said, one, again, they were aggressive with the rate hike. That is typically good for longer-term yields. When the Federal Reserve raises their short-term interest rate, longer-term yields will drop because of the projected economic slowdowns that those short-term rates might increase. But they also said, hey, this is going to be a moving policy. We're not set in stone to increase by 75 bips next meeting or 50 bips. Most markets are anticipating another 75 basis point hike at the next meeting. Everything is going to be dependent on data here. It's going to take a while. I don't think we're going to see rates pull back into the 4s, the mid-4s, the low 4s for months, possibly years. We're going to have to see consistent data showing inflation coming down. It's just going to take time. Biggest outlier right now is probably oil prices. There's not too much of a solution on the horizon to bring oil and gas down, other than two possibilities. One would be a resolution to the Russia-Ukraine conflict that would probably drop prices pretty significantly, and the other would be if producers increase their release. But with oil prices being high, there's profit there, so there's not much incentive for producers to release more of their reserves to lower prices on the market, because that's going to cut into their profit. So it's happened in the past. We saw it a few years ago when oil prices were going up and up and up, and all of a sudden they fell off a cliff because we saw a price war go on, and all of a sudden there was a glut of oil that was released. So that's definitely a possibility. What are we watching from here this week? Pretty low economic data. I'm going to talk about home sales in a second. Next week, a little bit heavier of a week. Durable goods, core capex. Friday, another inflation report that's coming out. So, I think we're going to want to be very careful going into the end of next week. I don't know if anybody really wants to be floating into inflation data Thursday and manufacturing data Friday. hopefully what we're going to see on the 10-year, it looks like we're going to pull back. We should retest the 3% range. If you look at this chart, you'll see these blue lines. These are moving averages. So right now it looks like the 10-year is going to at least go back down and test the 25-day moving average, which is right around 3%. It could go down a little bit lower than that. I wouldn't think so. I think buyers should be locking in the next couple of days as these yields push back a little bit lower. And what I think we're going to see is a pretty defined range for rates. I think we're going to see rates trading from, that 3% 10-year. I mean, the top of the range could be as high as 3.5. I think that's the ceiling. I think we've reached a peak. I don't think that we retest those heights unless we have some very unexpected inflation data next week. That's always a possibility. If inflation, core PCE comes in higher than expected and core PCE takes out energy costs, so it's a lower projection than what we saw 2 Fridays ago, but it is something that is heavily weighted by the Federal Reserve. This is their preferred gauge of inflation, is core PCE. So projections is 4.9%. If that comes in at above 5, we could see pressure. Could rates go back up to 6%? They absolutely could. So that's why we want our buyers to be defensive. I have a feeling that core PCE is going to come in probably right around where estimated. And what I would think is that we probably bounce from 3% on the 10-year, up to, probably this level that's shown pretty good resistance. Could be as high as 3.25, 3.3. I think that's going to be the range. I think it's going to be volatile. I think we're going to see big swings. So I think buyers do need to be protected. They need to be aware. They have to be locking in. They have to have the float down features. Big question right now for buyers is, what is this doing to the housing market, right? Am I buying at a bad time? Buying as rates are going up. We're looking at rates with 5s in front of them. Last week, any buyers who locked, which I was advising my buyers not to, they were locking at 6% rates. A lot of volatility. Is this going to bring prices down? We had housing data released earlier this week. It shows that inventory is still a major, major issue. 2.5 months of inventory in the market right now. It is going to be very, very difficult, no matter what rates do, for prices to drop significantly with that little inventory in the market. Now, buyers will start coming out of the market due to higher rates because of affordability concerns. So less buyers, inventory should hopefully start increasing a little bit, but we have a ways to go. I think before you would expect prices to drop, you'd probably want at least 6 months of inventory in the market. Could it happen? Absolutely. If rates go higher, I think it happens a little bit faster, but I don't think rates are going to go much higher from where they are. Again, I think we saw the highs of, probably the next couple of years last week. Can't cement that in stone, but markets are really kind of showing a ceiling here. Very strong reversal. Technical patterns. The fact that economic data is again coming out weaker than expected. We're showing global slowdown due to the policies of central banks around the world, outside of that inflation data that we saw 2 Fridays ago. So, right now, I don't see it slowing down. I think it's a good opportunity for buyers to come in and go after properties just because they're going to have a little bit less competition. We have our Approved to Move Plus program with the value guarantee, having a lot of success with that. If you haven't seen that video, it's on the YouTube page. Just go into the Realtor section. You can click on that. It's a 10-15 minute video going through that program. But any questions you have, you can reach out to me and my team anytime. Hope you have a great day, great weekend. Touch base with you guys next week.